Hello, I'm Richard Murphy and I want to talk about tax havens. Actually, I want to talk very specifically about how the UK is planning to become a bigger tax haven than it already is. Now, let's be clear. First of all, what is a tax haven? This is a difficult question to answer, and I can say that with some authority because I've written, well, not one book about them, but two. And both of those have been translated into quite a number of languages. So I guess I have some expertise in this area, and I can tell you it's not easy to define a tax haven. That's because they come in so many varieties. However, I did define a secrecy jurisdiction, and there was a good reason why I chose that name, which is now widely used when discussing the technicalities of tax havens. And a secrecy jurisdiction can be defined. It is a place that creates laws for the benefit of people who do not live in that place. And then it creates more laws that mean that those who are taking advantage of the first set of laws can't be identified to be doing so, and as a result may get an advantage as a consequence. Sound complicated? Well, it is, I guess it's fair to say. And the reason why is, of course, is that the country that creates tax haven laws is, in effect, and let's not beat about the bush, trying to help people cheat the tax system of the country where they're really resident or where they really trade. And so, of course, the arrangement is complicated because they're trying to stay within the law whilst getting around the law, which is a definition of tax avoidance. Now, the UK has been a tax haven for a very long time. The whole concept of offshore was effectively created in London in the late 1950s and was to do with the Eurobond market. Now, this is a long and complicated story. The first of these books, that one, which is by me, Ronan Palan and Christian Chavanneau, does deal with that history, and I think it's quite a good description of what happened. Basically, what London did was pretend that transactions between two foreign banks, which did, however, take place within the City of London, were not to be regulated in the UK. Hence, they were considered to be offshore. So offshore had nothing to do with desert islands, palm trees, nice beaches or anything else. It just meant not here. It meant elsewhere. That was if you could identify it, or somewhere if you couldn't identify where that other place was. And perhaps the ultimate goal of the tax haven participant, nowhere. In other words, not recorded in any jurisdiction in the world. And that happens. So the UK set up the whole idea, in a sense, of the modern tax haven. And of course it has ample branch offices around the world, which it still manages and controls, although it is claimed otherwise, to facilitate this arrangement. They are of course called Jersey, Guernsey, the Isle of Man, the Cayman Islands, and on, British Virgin Islands, etc. If you want to find a tax haven, well, look for the Queen's Head. It's quite a useful sign that you might be heading in the right direction. I didn't believe that when Brexit happened, the UK government would be stupid enough, I use the word advisedly, stupid enough to push the UK towards being an even greater tax haven than it already is as a consequence of the functions of the City of London in association with our existing tax havens. But there are moments when you have to accept that you're wrong, and this is one of them. The UK is clearly heading to be a bigger tax haven than it previously was. How do I know? Well, the government has just issued, HM Revenue and Customs has just issued on behalf of the government, a consultation on something called asset holding companies. Sounds pretty innocuous, but then everything about tax havens sounds pretty innocuous. One of the main activities of those desperately respectable organisations that run and manage activities in these places is to make everything sound as though it's so completely above board. What does an asset holding company do? Basically, it allows people to invest in normally land or underlying shares and securities in a way that means that no tax is charged within the asset holding company unless, and this is the big unless, that person happens to be an investor from the United Kingdom. when there have to be protections put in place to make sure that cheating doesn't take place. After all, the UK doesn't want to provide a tax transparent, non-taxed investment vehicle for the benefit of people in the UK who might as a consequence not pay tax on their income. No, it wants to provide a tax transparent, non-tax investment vehicle for the benefit of people outside the UK. Hence, this is a tax haven activity. That's one of the basic definitions. And of course, if the arrangements are then put in place through offshore trusts and nominees, and such things still exist, and it is hard to obtain information on who those people might be because information exchange arrangements aren't as yet perfect, as we all know, then of course the opportunity for abuse will arise. So what effectively is inside this asset holding company arrangement is, first of all, no tax, a classic sign of a tax haven, and secondly, what is called a ring fence. In other words, the benefit is not provided to people in the UK, but is provided in effect to everyone outside the UK. And that, as long ago as 1998, and that in tax haven or anti-tax haven campaigning terms is deep dark history. As long ago as 1998, the OECD, the Organisation for Economic Cooperation and Development based in Paris, said that having such ring fences was a sure sign that there was abuse going on. And the European Union Commission, on behalf of the European Union, agreed. So we are promoting a new tax haven abuse in the UK to be brought in 2021, mysteriously just at the time when we have left the EU. Who else provides arrangements like this? Well, the notable competitors are Luxembourg and Singapore. Red flag. These are, of course, major international tax havens, and London wants to emulate them. Back in 2016, I remember taking part in a seminar about whether the UK would become Singapore-on-Thames, as the joke went at the time, after Brexit, and I said I didn't think the government would be that stupid. Well, I was wrong. It looks as though that's where we're heading. What are the consequences? Well, of course, inequality in the UK will increase because these activities attract illicit or hot money funds into the UK, and by and large the income paid to a tiny number of people who work on these types of activities is high, and so we are going to see a relative increase in the rate of return to a few in the UK compared to the rest. There will be the risk that less tax will be paid. We will have a more divided society because effectively this is providing those who live in London but not permanently and so are not resident here with an opportunity to have an increase in the potential amount of tax-free income that they enjoy, and London suffers this problem enough already. So this is a direction of travel which also undermines the corporation tax yield around the world and reduces the chance that tax is paid fairly on all types of fixed investment income. In other words, it misallocates money. It encourages investment to go towards those things that can be hidden in this way, which are not productive assets, and undermines the allocation of money towards the real needs in society. All of this desperately worrying from the point of view of creating a fair and equal society that we need as we face the challenges of 2021 and onwards in recovering from coronavirus, becoming sustainable and dealing with the post-Brexit world. But instead, we're moving towards a more unequal, more harmful, lacking of transparency society where these things are going to be prioritised and the needs of real people are going to be ignored. You couldn't help but notice that this is also happening at the very time when UNICEF is for the first time ever planning to provide food aid to children in the UK who face food poverty. The stark contrast is unbelievable. Tax Haven UK does not worry about the fact that there is mass poverty in this country, and I do mean mass poverty in this country. It's more interested in putting in place policies for the enhancement of the well-being of those who are already rich and who don't want to make their contribution to society. What an indictment of this government that is. Thanks for watching this video. If you've enjoyed it, I'm pleased. If you want to see other videos like this, there are links below this screen. If you want to subscribe, hit the subscribe button. Follow me on Twitter as well, at Richard J. Murphy. Look at my blog, Tax Research UK. And if you'd like to donate, because this video series is being largely paid for by donations, there is a donations button on every single post on my blog. Thanks a lot.